Welcome. This is Power Trading Radio Live, fueled by Online Trading Academy. For more information, visit powertradingradio.com. Now, here's your host, Merlin Rothfeld.
Hello, everybody. Welcome to Power Trading Radio. Merlin Rothfeld in with you for your weekend edition. Made it through another week out there, almost. Oh, we say a third of the way through the month of February. We got the Ambassador of Opportunity, John O'Donnell, here in studio. John, how you doing?
I'm great, Merlin. Glad to see you. This is the first time we've been together but I'm not going to gloat over the Super Bowl, but because I know you're still smarting from that a little bit. But
yeah, it is what it is.
You know, my Kansas City Chiefs stepped up. By the way, I have seen all their victories in the Super Bowl. And obviously the last one was 50 years ago. But, kudos to the team.
You know, I always try to spin things from a perspective of how would I relate this to trading and investing. And if you look at the Super Bowl, everyone's saying the Chiefs did a great job and the Chiefs won. I actually look at the other way around. I think the 49ers literally gave them the game because of poor risk management, because of bad management from our manager. And what they did is, it's a game, right? And just like trading, there is a strategy and tactics that you have to do to preserve your capital. At this point, we had a 10-point lead with 6 minutes left in the fourth quarter. 49ers did.
Right.
In trading, if you have a lot of profits, your goal is to do what? Is to protect those profits. So you do things that will say, no matter what, I'm not going to lose this game. I'm not going to lose this profit that I've gained. So I will change my risk management to be a little bit more tight so I don't incur any losses. Instead, the 49ers did not do that. They threw risk management out the window. We have the number one rushing offense in the game. So you rush, which we were doing rather effectively, that bleeds the clock out. You win the game because the clock just keeps running and running and running and running. You get a couple first downs. This game is over. No way around it. Mm-hmm. Instead, we decide to pass, which is like the riskiest thing. So from a trader's perspective, it's saying, okay, well, I've got some profits. I'm going to double down. I'm going to take really risky trades here because I've got profit. That's the mistake that they made. They ended up not running the ball, throwing interceptions over and over again, and all of a sudden, we lose this game. So while, yes, granted, the defense of Kansas City did well because they took advantage of our risk-taking, we should never have taken that risk anyway. It should have been a run game for the last 6 minutes, and we would have won that no problem.
Yeah, you're right. There is a big relationship between sports
Absolutely.
and trading and risk management and being decisive and disciplined and staying on the path of executing strategy. And when you veer off, or whoever made those decisions, I guess you have to blame it on the coach one way or the other. Yeah. You get that end result, and I know it's very disappointing. I would not be surprised, by the way, matter of fact, that we'll see those two together.
I think so too.
Either them or Baltimore next year in the Super Bowl. But I'm confident that the Niners will have a great year next year.
I think so too. No one saw this year coming for them. I did not think we'd make the Super Bowl. It was great. So we got a bunch of viewers out there, Chadsbury and Gayer. Good to have you guys with us today. And of course, we got Redneck Trader out there. I love your picture, by the way. The Redneck Trader's got it looks like an elk as his icon. And we've got Trent, Jorge, and Big Eb. If you guys have questions, want to talk about something specific today, let us know. Send it on in your chats or go to powertradingradio.com. Click the little button there that says Power Blast and send it on in. All right. Yeah, it was not a good game for Richard Sherman. However, he wasn't the weakest point. He was a weak point, to be sure. He's an old guy. I mentioned on the show yesterday, John, I got a question from a gentleman, I believe his name was Lee, talking about central banks really doing a much more aggressive research and dive into a digital currency, the digital dollar is what I was calling it yesterday. So what would be your thoughts on that? I don't know if you saw yesterday's show on it ended up being pretty much most of the show. And I'm curious to get your take on it because I know you have more of a Fed and maybe an economic perspective than I might.
Well, the central banks need to come up with a new system to more efficiently clear funds or clear transactions. Their existing system is just too cumbersome, and they have to take a look at this technology. Mm-hmm. And I expect, and I had this conversation, over a year ago when we were talking about the potential of a crypto dollar. Mm-hmm. And is it possible for them to use the blockchain technology to more efficiently clear funds versus, what is it, the SWIFT system?
Right.
Absolutely. And I think central banks have to compete like everybody else has to compete, because there are alternative methods to move funds from point A to point B, by some for nefarious reasons and some for remarkably good reasons. So I would be shocked, if to tell you the truth, if over the next 36 months we don't see some central banks to come forward to start using this technology. Why not? I mean, why not? You know, I mean, if you look at all the electronic transactions that happen within our borders already, where there's almost immediate settlement or very efficient settlement, what if we could do this more efficiently? I don't think a central bank, however, is going to reluctantly, easily give up their monopoly to print money, you know, either digitally or physically. They love to have the monopoly. And of course, the Austrian School of Economics has been against this for over 100 years and has warned the world of the evils of a monopolist currency, central banking phenomenon. And there's a great book on this topic, which is What Has Government Done to Our Money, written by my mentor, Dr. Murray Rothbard, if somebody wants more details on why a monopolist system should be abolished. So,
so my argument yesterday was that this actually gives them greater flexibility with the ability to manipulate the dollar. So I was exaggerating yesterday when I just threw all my money on the counter here and I would love it if I didn't have to carry any cash whatsoever. And now our digital device, I would just go like this, boom, I can pay you, done, tap, I paid you. The ability to increase the money supply would still be there because cryptocurrencies aren't necessarily capped. It depends on who's controlling the cryptocurrency, right? Bitcoin is capped right now at 20 million, but they could elevate that should they choose. So to me, it doesn't change the ability for a Fed to continue to print money. I think that's a fallacy a lot of people have. They think, well, then it would be capped, right? So we'd see our dollar fluctuate more. No, they would actually be more control over those fluctuations. But then it's a case of very Orwellian 1984 type stuff where Big Brother can have access to anything. If all of a sudden they wanted to come after you and shut down your accounts, they literally could hit a button and your accounts no longer function and all your assets stop.
Right. You know, let's remember probably the greatest role of a fiat currency for a central bank, if you really think about it, is to finance a war. You really think about it.
That's what it is.
Going back to World War I, going back to World War II, the Korean War, Vietnam, etc.
Way before
banks love, well, even back to the Civil War, banks love being the monopolist for the currency to finance wars. You know, over and above their political agendas, which is basically about making a bunch of promises they can't keep and then running up a bunch of debts and kicking the can down the road to the next generation to pay because the next generation doesn't know what's going on, or at least don't believe what's going on. And, you know, there's a real moral hazard to that Ron Paul has been an outspoken critic of for decades. But for some reason, our Congress has not had the courage to even demand that our central bank withstand public audit. I mean, it's amazing. You know, we talk about accountability and credibility. What's going on?
Benign neglect, John. Isn't it better just to let it die? I don't want to know what goes on behind the scenes. You know, it's like when you go on vacation, you leave your kids at home. I don't want to know what you did as long as the house didn't burn down.
It's a Sergeant Schultz. I know nothing. It's a Sergeant Schultz defense, okay? And it's across the world. I mean, the same thing's going. I mean, it isn't just, you know, our cast of characters. It's the whole system.
So would this be good or bad? Having a Fed coin, digital dollar.
Well, good for whom? Will it be good for the individual that does not have the capability to protect himself against rampant currency printing and dilution of the purchasing power of the currency? It won't be good.
Right.
If you issue a lot of debt and you have the facility to dilute the payment of that debt, if you are the reserve currency of the world and you can go $20+ trillion in debt, not even to compute the unfunded liabilities of Social Security and Medicare, which arguably are not even on the balance sheet except for a footnote being north of $200 trillion. And if you can print up the money, and if people will continue to buy your debt being repaid in a diluted currency, it's a beautiful way to wipe out debt.
Yeah, well, it will be a topic of discussion. I think we will see it. I think you'll see a digital dollar in a few years once they get the kinks worked out of the system.
What's to keep us then from a digital pound and a digital euro?
They may actually beat us to the punch.
And a yen, absolutely. And I mean, you talk about that electronic trading. The sophistication of retail buying and selling in Japan is much more sophisticated than what we have here. They're way past plastic.
All right, let's go look at a few other things here. I've had a bunch of questions over the past couple of weeks, actually a few weeks, on MJ. Marijuana stocks obviously were a super hot topic, and as you can see by this chart, it's been a bit of a fall from grace. 2019 was not a good year for most medicinal marijuana stocks or commercial. I say commercial, recreational is what I meant to say. Marijuana stocks. I had a moment, John. I had a moment, right? You look at this chart here of MJ. This is an ETF which represents a basket of different companies representing a whole bunch of different segments within the marijuana space. Question. I'll read two of these questions so you guys we'll answer them both. But Ivan says, I want your thoughts on the pattern that MJ is forming a double bottom with a recent spike of new highs and whether it represents a buying opportunity at a demand zone that it hit today. That's one. The other one, last time I wrote you said you were bullish. This is from Mike LaRusso. You had your MJ options. I'm no longer in MJ or the options. I exited my MJ at 18. Still somewhat bullish on marijuana stocks as it looks like the ETF MJ is bottoming. I'm following a lot of marijuana stocks, noticing that many of them are bottoming and turning up. Could this be the bottom? I'll leave this chart up here, John. I'm going to let you give your 2 cents on this one before I jump in. Bottom on MJ or not?
Well, I have no position in the marijuana space, period. So I really have no opinion. But what is the all-time low on MJ? If we were just look at it from an Online Trading Academy
you're at it.
core strategy perspective, if we went back, if we could get that data, perhaps in some 1-month candles, what is the absolute low of this thing?
It's right there. It's this low. I think we actually maybe at it today. It could be all-time lows, right? The 1595 is what it was, and today we hit 15. So we're at all-time low today, 1591.
And you're telling me it has options?
Yeah. There's options on MJ.
There's options on MJ?
Yeah.
I wonder how expensive the options are.
I don't have the options chain here, but bottom line is look.
Here's let me give. I don't have a position. I don't really. I mean, I hope the industry gets traction. I believe in freedom of choice. My drug of choice is something a little bit north of caffeine, so I'm not there.
Brought to you by Mountain Dew.
However, if I did want to participate and have a position in this industry, I would probably want to do it at or near these all-time lows if I could buy some options at an attractive price.
I sold mine that last recent spike when it brought it up into 18. I still felt like we were in a big downtrend. Luckily, I was rewarded, and it did go up much higher than where I got out at. But if you guys look at the trend here, it's not great. We've had this big sell-off. It's just been stuck here and floundering. I know a lot of you
are going sideways. We have a sideways.
It's going sideways, and you are at all-time lows. So you can make the argument that this is the bottom. I make the argument that the bottom is zero. I don't think it would get there, obviously, but it could have more downside movement. So I'm not that optimistic on MJ right now. One of the reasons I bought out of it, I actually sold my holdings in MJ, and I bought several thousand shares of another cannabis company, Kushco, just because I've been doing a bunch of research on that specific company, and I feel like that is another opportunity. So I moved away from an ETF, which would keep me somewhat diversified. So let's go KSHB. This is the one that I've been picking up over the past couple weeks. You can see it's just been absolutely crushed. I mean, it is not a good-looking thing. This is an hourly chart. Let's go back to a daily. So yesterday added some more to my position, so I'm fairly happy with that. And again, you look at this and go, well, it looks very similar to MJ. It's just flatlining. But there's reasons why I moved into this one. A lot of it having to do with them clearing a lawsuit. Second one, they're looking to get uplisted onto the NASDAQ, which I think would be a huge spike for them as they'll get added to some other indexes. So I usually, when I'm not taking the time to dig deep into an industry, I will buy the ETF of a specific industry or sector. In this case, I moved away from that, and I really kind of focusing more on Kushco Holdings, which I feel like there's potential there. I feel like it's stabilized, and you can see that it is starting to make some higher lows here, even though it's still a penny stock. This is absolutely in my high-risk trading account here.
As a category, I wouldn't put any more money into this category, regardless of what vehicle you want to use, except what you're willing to lose. because this is still going to go through, although the regulatory trends seem to be blowing in their direction right now and have for the last year or so, this is going, how do you pick the right company within the space? I get that there's a lot of people that are very favorable about this, either regulation or even medically, but how do you pick the right company, the right leadership, the right balance sheet, the right regulatory environment, the right distribution model? That's tough.
It is.
Very tough, okay? So I wouldn't, it's not from my cup of tea. Let me
It isn't,
throw
but
out
you know
there.
what? It's funny when we look at a lot of the mechanics of what we teach in our classes Online Trading Academy. It has to do with having a plan, having structure, having risk management is probably first and foremost in there, and understanding that there's certain things that put the odds in your favor. And one of those odds, obviously, is going to be the trend. If you look at the trend of legalization of marijuana in the United States, it's clearly picking up some steam. And it seems to me at some point we'll probably get to an area where it will become federally legal, and all of a sudden that will open up even more opportunities. So I think you're still kind of in the gold rush days on this. I think a lot of it will be like the .com companies. A lot of these will disappear because of underfunding and undercapitalization. A lot of them will be consolidated into other companies, as Cushco has been buying up a bunch of other smaller companies, kind of ensuring that they've got their tentacles in all sorts of areas within the industry. So something to keep an eye on out there, but it's definitely in its infancy, I think. All right, let's do this. Let's take a quick break. We come back. I want to go to some listener questions out there. I see Paul is asking about the digital U.S. dollar and what percentage of transactions happen digitally. Not 100% sure on that one. I'd probably have to have a researcher dig that one up for me, but I assure you it's quite a lot. Also have some questions here regarding ADRs, which I had to ask John about because I don't know much about ADRs. We'll look at that after a quick break. If you have questions, send them on in at powertradingradio.com. Click the little Power Blast button there, or go to our YouTube channels. Say hello to everybody on our Friday show out there and send in your questions. We'll be right back after a short break.
What if you knew the income strategies professional investors used? The strategies designed to generate active income from the financial markets. After all, no one's going to care more about your money than you.
I learned that I can be in control of my 401k.
I used to work for money, now I have my money working for me.
With the right training and guidance, you can learn the skills to become a more confident investor and make your money work harder for you. Want to find out what's possible for you? You can, as long as you're willing to take the first step and call OTA today.
Call for your free tickets right now, and you'll also receive a free Professional Insiders kit loaded with lessons from some of our top instructors on topics like enhancing your retirement strategy, capital preservation, and income generation. The Professionals Insider Kit makes it so you can get started right now.
Call 888-304-8723 or visit us online at tradingacademy.com and schedule your free class today.
Click is something I wish I had when I started because it facilitates the learning process a lot quicker.
This is not about taking many trades, it's about taking the right trade.
It helps me save myself from myself. It's just a revolutionary educational tool. It just propels you through the learning curve.
The biggest shock for me is the level of innovation that happens within the company, and it's continuing.
Is just perfect in this new century of trading.
Everyone's on the same side, and I think that's what I love about it more than anything else. Helping each other, supporting each other, all with the same objective. Again, wonderful.
There's no mountain high enough that the leaders in this organization won't climb for their students. They'll just never give up.
It can only help. It can only make one a better trader.
Gives you one of the most valuable things we all have, and that's time.
Welcome back to Power Trading Radio Live with your host, Merlin Rothfeld, and today's special guest.
Hello, everybody. Welcome back to Power Trading Radio. Merlin Rothfeld in with John O'Donnell for your weekend edition. Shout out to our viewers out there today. Went on a little bit of a viewer tangent here. Mike and Ivan were asking about MJ as a bottoming out stock, and I see we have Trent and others in here who are in the industry. So congrats, Trent. That's a fun industry to be in. I actually have a few friends who are knee deep in it from all different aspects, and I love it. It's actually I think there's a lot of potential out there. And don't take my comments on MJ as the industry doesn't have potential. It's just saying right now it feels like it's flatlined with those companies in MJ, and I would be a little bit cautious there. if you are looking for a long-term buy and hold, yeah, you could say MJ might be a nice buy here, because I do feel that down the road you'll see weeding out of the bad performers, the good ones will stay, and those will get put in this MJ index, and all of a sudden it'll start to take off again. But that could be down the road, as a lot of these companies have been beaten up. I see some of you guys talking about Aurora having bad leadership and stuff. That I haven't researched that one at all, but who knows? That might be the case. There was a question that came in, or a comment that came in from Paul. And he says, isn't that really what we got going on right now? We have like 97% of all transactions occurring digitally in the U.S. Well, I don't know if it's exactly 97%. I can tell you that probably 99% of my transactions personally are done digitally. The difference is, and I'm not going to show you my credit card because I don't want to give you, I'll cover up some numbers. When I have my credit card here, I am not operating technically with a central bank. I am operating with with Visa. Right? So I am trading in dollars, I am trading in that currency. However, it's not through a centralized entity that has all the information. So if I'm using these different credit cards, I might be going to MasterCard or Discover or Visa, American Express, and I'm kind of working digitally through those entities. The digital dollar, if the central bank does it, I'm kind of curious what your thoughts are on this one, John. Do you think it would get to the point where instead of us actually having a bank account or needing to use a Visa or a MasterCard, that since the Fed would be controlling that ledger, would they now become our bank? Where we just basically have a Fed account and we can now access that blockchain with dollars direct to the Fed?
Well, my vision of the future is this, and it's simply my opinion, that this will not destroy the Federal Reserve fractional reserve banking system. The Federal Reserve fractional reserve banking system allows its members to take in capital, make loans, and basically the role of the central bank is to be the lender of last resort and basically make settlement and handle the custodianship of the reserves of its member banks.
Right.
The credit card you just described, yes, you're going through Visa, and yes, they're basically going to confirm they've got member banks where the data or information about your debits and credits are transferred, and then they have a guarantee where they will make sure that the merchant gets covered when you go buy a $5 cup of coffee. But and then there's a settlement process in the background that takes place, generally with a merchant within 2 days, depending upon your merchant account status. I don't see a fiat currency system going away. I don't see a central bank wanting to eliminate their monopoly to print units of currency out of thin air, which in this particular case it won't even be running printing presses anymore. They'll just basically be adding digital entries to a digital ledger. But I don't see the fiat crypto space eliminating, in my lifetime, maybe your lifetime it'll be different, Merlin, but in my lifetime, I don't see any central bank wanting to give up their monopoly or their fractional reserve banking system. The fractional reserve banking system is how they get money out into the system and literally create money out of thin air.
But they could do the same thing, fractionally reserved system, with their digital coin, because the only person that could see their ledger would be them.
They could, but I mean, we've got one central bank and 12 jurisdictions. What happens to J.P. Morgan, Citibank, Bank of America, and all their branch network to service 300 plus million people? I don't see the Federal Reserve going into the retail banking business. I think they're very comfortable performing their role.
Plus, their members are the banks, so you kind of need them there.
Yeah.
All right, let's see. This is a little bit of a shift of topic from Gayer, who sent this one in. He said, "Hi, Merlin and John. So I've started looking at Forex day trading as a profession, but there's a problem. I can't get myself to click the button on large trades. My win rate is around 60%. Congrats, that's pretty good. Average trade margins around 50 to 100 bucks. So the question is, what advice do you give for someone who's trying to get his mindset around having a $500 margin versus a $50 margin?" You're basically adding a zero.
Wow. Well, first of all, just stick in your lane, bro. I mean, this is a marathon. This is not a sprint. If you've gone from you're at the $50 level right now, and you aspire.
But that's a margin.
Okay, and you aspire to get to the $500 level. You got a long journey in front of you. That is not a big trade. And I would suggest, I think what we tell everybody is start small, trade small. Your first line of defense on any decision that you make is position size. That's very, very important. And then where are your stops? How are you defining your stop, entry, target, and et cetera, and size? But if you're in that category right now, trade in that level of risk that you can handle and grow slowly.
Yeah.
There's no reason to be in a hurry.
A 10x
in the development of this skill.
Yeah.
Okay.
You know, it's one of the things we talk about with our students in the classes in Online Trading Academy, which is let's make sure that if we start off very small. So if we start to lose at the beginning, which happens to many, many people, they're trying to apply too many things and apply all they learned. There's going to be some slipping and sliding that goes in your account, and you take some losses. If you're at that point now, Gayer or anybody else, that you've proven, okay, I've got a 60% win rate, that still doesn't tell me that you're profitable, right? You could have a 60% win rate, yet your losses are twice as big as your winners, and you're a net loser. So there's two factors you need to consider. Number one is, what's your win rate, and what's your average win ratio, profit ratio? Is it 2 to 1? Is it 3 to 1? Or something that's inverse of that? So once you've proven to yourself, and I would say over a couple of months, don't just do it for 1 week and say, hey, I made profit in a week, I'm going to jump and do 10x. Then you start to increase, right? So let's say you've done it for 2 months, and you're trading, let's say you're trading, $50,000 worth of the US dollar. All right, well, maybe now you step it up to 75,000 or 100,000. Doubling it might be a little bit risky, but you start to increase. Putting your mindset around all of a sudden adding that extra zero on there, if you've proven that your strategy and your tactics work, it shouldn't be a big deal. The only time it would be a big deal if you're going, from let's say 10,000 to 100,000 is, will that increase in size move whatever market it is that you're trading? Will that have an impact? So if I go from 100,000 to let's say a million, I might have an impact when I'm buying and selling. But you're probably starting off much smaller. I wouldn't really worry about that. Just make sure that you take smaller incremental steps as opposed to going from a 10x increase in the risk that you're taking, because that could make you a little bit unnerved. You start to break your rules. You don't follow the plan that you're supposed to do, and then all of a sudden you lose everything, which is what we don't want to have happen. All right. Who was asking me about DuPont earlier? Let me see if I can. You guys, we got the cultivation channel going on over here right now on Power Trading Radio. Love it. Who was asking about DD earlier? Sorry, see if I can find this one. Somebody was asking about DD. Where is that one? Dab nabbit. You guys have talked. There's so much chat going on. I can't find out where that DD comment was. There it is. Trent asked about DD. So let's bring up old Double D. There we go. DuPont. Powerbust a couple weeks ago was wondering if you could do a weekly analysis of DD. I'm long-term options with 360 days left. Right now, I would say this. You guys remember my comments from the MJ ETF, right? Doesn't look good. At least MJ is trending sideways. This one still is on a pretty aggressive downtrend. I mean, you're down 50% since October of 2018. Not pretty. Now, you do have a small little bounce that happened last week. I'm still not that comfortable with this one. It looks to me like it's going to be seeking out new lows. So if you're long puts right now, okay, I would feel comfortable with that. I don't know if I would be comfortable holding long calls at this point. It just feels like it's going to be drifting lower, especially since what we've seen over the past few months here. I'm not a big fan. I would not be a buyer of DuPont.
It'd be interesting to figure out what his strike price is. He didn't tell us. He told us about time, but I wonder what his strike's at.
Yeah,
but I think you're right. I think we're in a downtrend, and there's just not a motivation to buy it in a downtrend.
Yeah.
Again, if you want to buy some puts, buy some protection, that might not hurt you. But we got a long way to go.
That we do. Speaking of a long way to go, you have a workshop this weekend, don't you, John? You got something cooking?
Matter of fact, I do. I'm going to be in Long Beach, and we're going to have what's called a power trading workshop. I understand we have a nice audience set up. How can somebody get it? Do they go to our website, Merlin, or do they go, because this one's going to be sponsored by the Irvine Center. What's the best way for them to get a seat in this workshop?
You contact that local office.
Irvine?
It's in Los Angeles?
No, it's going to be in Long Beach.
It's a good one. I would contact the Irvine office. You can find out more information. There's a link that's going to show up in social media right now. You simply would click on that one. You type in your zip code. It'll actually put you to the center that's closest to you. If you are in Long Beach, I think that would actually be under the Irvine Center. So there we go. Click that link. Find out more information.
Stop by. I'd love to talk with you. We're going to talk about. We'll expand on some of these topics. I've also got a little demo that we've put together on Click.
Oh, and, so we talked about, what did you do? Okay, I've been meaning to mention this one and I keep forgetting. Gee, John, you guys did something very exciting this week with Click.
Well, we had a class, a live class in session. This is the final day of this class. It started on Monday, ends on Friday today. And we did some live trades through Tastyworks, and we executed the trades. And everything went fine. And it was a beautiful event, and everybody applauded, and somebody cut the ribbon. I should have brought a little bit of champagne to pop the cork. But we've been stress testing this. I participated in an internal stress test with some of the employees of Online Trading Academy about a week ago, and we're now releasing it in our class. Woo. And which, Merlin, our company pioneered live trading in our learning environments way back in 1997-98 era. We are now back, especially in the core strategy class, where they will be given a certain level of buying power. It'll be small buying power, but they're going to be live trades, and they're going to be real trades, and they're going to be real fills.
We talk about all the time, and one of the best ways to learn is with real money on the line. Something happens when you put even $1 on the line. There's a little bit of adrenaline and nervousness and sweaty palms with it. And one of the things I loved about teaching when we were trading live with real money, and the students are trading with real money in core strategy, is watching the people's behavior change when they switch over. So like the first couple days will be in simulator, just okay, we're live market data, but it's not real money. And you see people doing stupid stuff like, oh, I'll buy 1,000 shares of Intel. Yep. You're like, why would you do that? You were not even trading 100 shares yet. You're trading 1,000. Then all of a sudden they get in live and everything changes, and it's great having to deal with those psychological fear moments from these people.
Yeah, they don't. Even though they're trading with our capital, they're not putting their personal capital at risk. And by the way, kudos to A.L. Shahar providing the leadership. We're the first company way back circa 1997, 98 to pioneer this methodology on our trading floor. You were part of it, Merlin.
Yep.
Where we believed in live executions. We believed that, of course, back in those days, we were owned by a broker-dealer, and it was very easy for us to do with the CyberTrader platform, if you recall.
Yep.
But many of our competitors have never been able to figure out how we do it, but we figured out how to do it, and the students love it because we call the practice learning the skill through immersion. You're not going to learn how to swim, reading a book on swimming or watching a bunch of YouTube videos.
I played a PlayStation swimming video game.
You did?
Oh, okay. Great. Never drowned. Not once.
Obviously, Shaq did not learn how to shoot free throws watching a YouTube video either. So at the end of the day, we learn best by doing something. And when you have real skin in the game, it really gets your attention and it accelerates your learning curve. And we don't do it to be a gimmick. We do it because it's a real teaching moment that cements, wow, I got a real position here. And for some of the people that we have served over the years, this is the first time they've even participated in the market.
Right. Yeah, absolutely. Two things. Greg says, rate Tim Blotzer as an options instructor. He's coming to Atlanta campus in 2 weeks. You always have him on a lot. I love him. I think he's awesome. One of the things I love about him is he's one of the most structured, simple guys. He's not going to go outside of his norm. He's not going to go past this specific point of his comfort zone with regards to trading. What happens is so many times with traders is, it doesn't matter what asset class, they'll stay inside this little box, but all of a sudden they're encouraged to go outside and do things that are beyond their comfort zone, and quite often that ends up being a significant loss.
And he does a lot of call writing, and by the way, he calls it the rubber ducky trade.
The rubber ducky trade.
And it's a big deal, and he's absolutely loved by our students everywhere he goes. He's constantly booked in classes because not only is he extremely skillful in what he does, how he does it, but he's extremely skilled in communicating, helping you learn the rubber ducky trade.
The rubber ducky trade. Now, last question here is from Chadsbury. Says, what do exchanges do when there's a huge market order placed? They can't stop it out. Well, look, it depends on who's doing that large market order. If I'm an institution and I have a huge market order, If I'm looking to manipulate the market, I will send it to the exchange. If I'm looking to get around and just exit this position without creating any waves, I will go to a dark pool and not show my footprint in the marketplace. So it really depends on what the goal and objective is. For most retail investors, you're not going to be trading big enough to manipulate or move a market. That said, I can go out right now and find a couple thousand stocks. I could move a market like that with just 1,000 shares because of illiquidity. So when we run through selection process in our classes, it's saying one of the considerations has to be how liquid is that security that we're trading so that we don't move that market unless that's your goal. I would not advise it. It's really difficult to do, to move the market and then to get out and profit from it. So if there's a huge market order, what's going to happen? It's going to start taking people out. Let's say it's a large market sell order, right? You want to get out of your position, you want to sell 500,000 shares. It's going to keep running down the bid and taking all of those buyers out as they go, plus all the reserve orders and displayed orders until it finally finishes, and that could create big spikes down. But normally there's so much liquidity in the marketplace that's not going to have that big of an impact. All right. How do you not show your footprints? Very carefully. You can do it.
Look, retail footprints?
Retail is easy.
Are meaningless. You have no footprints as a retailer because you don't trade in big enough size to impact the spread. You're not really trading in big enough size.
Right.
If you're an institution, they got all kinds of tricks that they can use, including, like Merlin just described, off-exchange trading. The vast majority of New York Stock Exchange listed companies ultimately make settlement off-exchange.
Right.
You're not seeing, all the footprints.
They still have to print. You'll see the transaction come across, but what's more interesting, and that was a comment that came in from, let me get your gentleman's name out there, Junebug. Junebug Spade. It's a great movie, by the way. You still see footprints by the way that price moves on the chart. Using level 2 screen, forget it. It doesn't work anymore. Watching the time and sales, the actual transactions, can help a little bit, but there is a delay sometimes in how those trades are reported. I'm a fan of just straight watching the price charts, and you can see where things stop and turn. I'm probably not going to stop Tesla from falling in price, but Goldman can, JP Morgan can. These guys have the power and the resources to not only work individually, but also collectively with other member banks to stop things from falling past a certain point. So that's where we see the footprints. To disguise them for us as retail, there's, like John said, there's not even really any footprints because we're so small and insignificant. I actually, in the late 90s, got to a point where I was getting too big and I was leaving footprints. That was bad. I actually scaled back, so I didn't leave those footprints anymore. All right, so yeah, dark pools are an interesting thing. That's basically where they almost like blind bidding sometimes. Someone will just say, I've got 500,000 shares to buy right here. And if it matches up, it matches up. But it's off of your normal exchange trading. It's just reported to the exchange within a certain period of time. So you got Long Beach this weekend is your stop, right? Nothing else?
That's it.
All right.
But I'll be giving a talk in our core strategy class next week. I'm looking forward to that. Stephen Hanaho will be back. We also, I believe, I think we have a futures class next week, and I'll probably be giving a talk in that as well. Nice. And other than that, I'll be doing a couple of John O'Donnell Chart of the Week series with TJ, our chart master.
Okay? John O'Donnell Chart of the Week. You can see those at Online Trading Academy's YouTube page. There's some great charts that go up there, and John gets to pontificate on those charts. So if you want to know more information about Online Trading Academy, how we might help you understand how these financial markets work, or to find out which center is closest to you, maybe you're going to take that class with Tim Blotzer in Atlanta or in one of the other 47 physical brick and mortar schools we have around the world, feel free to click that link showing up in social media right now to get more information about it. Just type in your zip code, it'll tell you which one is closest. You can also send in your questions at powertradingradio.com so we can get them all ready over the weekend. Junebug, I'll just say this as a parting one. He says, it feels like institutions see my position sometimes. I could be hallucinating, but you really want to know the answer to that one? Depending on who your broker is, they can see your positions. So just saying, I've actually seen working with a market maker in Texas, I think it was Austin, or I forget, I think it was, I won't mention the company name. We were actually sitting there watching the NASDAQ market maker's workstation, and you could see people coming in. The guy goes, oh, that's a day trader from this firm here and this firm here. So they can tell, but they're probably not targeting your stops. No. But that's it.
Your retail size makes you a non-entity for them.
Yeah, absolutely.
You're a non-entity. Okay, I get that we think there's a boogeyman in the back room, but they're just trying to get their order filled, that's all. They're working on behalf of a client who's the other side of your decision. Retail order flow is meaningless, okay, because it isn't a big enough size. even collectively, it's not really a big enough size. I assure you, Tesla was not moved by retail. Tesla was moved by institutions this week. The vast majority of it. Sure, there was some, retail footprints around it, but you don't move stocks like that with that kind of market cap that way without institutional participation.
Let's go to, he's talking about spot Forex. That is one of the Wild West still kind of. It doesn't have centralized exchanges, so.
But that's the banks.
There's a potential there. So
that's the banks.
All right, let's go to Monday's calendar, TJ, so we can wrap up today's show. Monday, February 10th brings us nothing for the U.S. It's quiet. We do have stuff for the euro, though. You have the Syntex investor confidence numbers. British pound has BRC retail sales monitor. Canada with the housing starts. Australia with the NAB business confidence numbers. And a bank holiday for the Japanese markets. Moving on to your earnings calendar. Yes, there's still earnings coming out. Itaú Unibanco, restaurant brands, Ring Central, Lowe's Corporation, Brookfield Infrastructure, and Steris PLC will be reporting earnings on Monday. There will be some others as well, but those are just some of the major market capitalization companies we have. Also on the show, and I'm pretty excited about this one because Brendan, you sent in a bunch of different options questions. A lot of you sent in options questions. We'll have Patrick Valley on the program talking options on Monday's show, so get your questions in. Of course, that's at 3 p.m. Pacific, 6 p.m. Eastern Standard Time. For our UK friends who are asking me to say, what time zones? Yep, that's 3 p.m. California time, which I believe I believe it's about 11 p.m. in London. That will do it for our weekend edition. On behalf of myself and John O'Donnell, well, thank you guys so much for joining us today. Hope you have a fantastic weekend, and we'll see you next week.
Peace.
We're out of here.
You're listening to Power Trading Radio live. Watch the show live or on the archive at powertradingradio.com and YouTube. Or download the podcast from iTunes or wherever fine podcasts are downloaded.